most of the markets. All eyes were on this Euro summit that occurred on December 7th, December 8th. And it really not a lot came out of it. But the one thing that's pretty obvious is the powers that be want to hold the euro together. And I know a lot of people into the more conspiratorial side of things, they think that the euro is going to fall apart and there's going to be a total catastrophe and all the markets are going to come down. You know, I'd have to think like what Mark Farber was thinking last year. He said that the Super Bulls and the Super Bears would both be disappointed. You're going to see the market stay pretty flat, not to be go crash too much or to go up too much. But what's obvious with the euro, as it's being held together, and they're going to do various steps to keep it together, national sovereignty of the various countries that are part of the European Union is going to start eroding piece by piece. And that's what the people are starting to realize, and they don't like that, obviously. And actually, from what I've heard about, most people in Europe don't like the euro as it is anyway. But the powers that be are going to force it on them. You're talking about power was ebbing rapidly away from the national parliaments towards the euro center. There's going to have to be cooperation. They're all like tied together climbing a mountain. If one falls, they all fall. So they're forcing them to work together. Some of the nationalist type people are going to be protesting a lot more in various countries because of what it means. Everybody has to give up something. You know, Germany's probably going to have to act as more of a backstop to the rest of the European Union, and you know the people in Greece or whatever, Spain, are probably going to have to, you know, raise taxes or cut spending, and it just has to be. And actually, nobody likes it. But one of the things that they're expecting from this, and these are like with the financial markets, we're thinking that there's going to be a lot better word about this, was that they're going to be buying more and more. The ECB, the European Central Bank, was going to be buying more and more bonds. But they're not necessarily going to do that. They're going to help out a little bit, and they're not going to really do that much. And one of the big questions is how the governments and Eurozone governments and banks are going to finance themselves over the next 3 months. They really didn't answer that question. So everybody's like a little bit nervous, so you don't see the markets going up too much or going down too much. There's no like hard moves you're going to see right away. For this reason, there's going to have to be some type of black swan event. And to me, what that might be is something in the Middle East. I know that Iran captured one of our U.S. CIA drones recently, and from what I was told by someone that should know, was that it was actually the signal that was being sent from the satellite to the drone, which was coming in encrypted, was the Chinese cracked the code and they were able to send signals to the drone itself and have it land in one of the military air bases in Iran without any damage to it at all. So they're all over this thing, and there's talk about possibly being some type of mission to destroy it, or some type of maybe drone air mission to destroy it or something. But that could be something that could cause the Middle East to heat up very, very quickly. I don't know, but that's an event that I think was not planned, and I think that's what's going to happen over the long term, is that the oil prices are going to really cause so much havoc in the economy that they're going to have to inflate the heck out of the currencies. They're just going to have to print more money. Countries going to have to be buying its own bonds. There's going to be a lot more quantitative easing going on. We do know for a fact, or pretty much a fact, that in QE quarter 1 2012, there's going to be another QE3 coming out for $800 billion. Now that's going to cause the metals to go up. Now, I've been thinking about where the heck are these metals going to go up to, and how fast they're going to go up. Um, you look at so many people's predictions from the past and how wrong they were. Because these people are very bullish on metals, or they're working in a place that sells bullion or whatever, or there's some wild predictions out there, and I just can't believe them, 90% of them at least. But I am bullish on the metals. I was just looking at some things from the past. We had back in the 1920s that gold was about $20 an ounce. Silver was still about $1 an ounce. You had about a 20-to-1 ratio. Gold hitting $8,000 an ounce is not unreasonable. And if we say at a 20-to-1 ratio, it's $400 an ounce for silver. But some of these forecasts of like silver being thousands of dollars an ounce, I just can't see that in any respect unless we go into some serious inflation. Fundamentally, I think silver is never going to hit thousands of dollars an ounce, just because it really isn't that scarce. I know you look at the numbers and stuff like that, but I'm aware of things like in Nevada. Even in the United States, Nevada has a hell of a lot of silver, a lot more than people think, and it's they don't bother to extract it because there's a lot of stuff going on. You have to deal with the Bureau of Land Management or the EPA, and you got to replant the whole area and stuff. It's like like in some other countries like China or Russia, there's not so much of a problem dealing with the environment. They just go ahead and do it. If you look at the mine, like the nickel mine in Russia that produces a large amount of the world's palladium, there's not a living tree living around that mine for 30 miles radius, and it's been like that for decades. It's so polluted. So, but mining in the United States, sometimes it's kind of tough to get it going. But there is a hell of a lot of silver out there. I mean, there's like some of the surveys I've seen is like almost an ounce a ton and you're actually taking square miles of land and going down 200 feet. And I pulled up these numbers before in a previous video, and there's millions of ounces of silver even within the United States in small areas. They just don't bother to mine it because the price isn't there yet. But if you start going up to hundreds of dollars an ounce for silver, they're going to be mining that stuff like crazy. And on the other side of the equation is there's going to be a lot of demand destruction. So I think what's going to happen with silver basically is going to be an extreme price movement upwards because of the debt crisis, not because of any fundamentals so much. I can't buy into some of the extreme moves just due to fundamentals. But assuming like I think they're going to be printing more and more money. You're going to keep the Dow up. I'm not somebody who's into. I don't think they're going to let deflation take place. The Dow is going to continue to go up. So assume even the Dow went up to 14,000, and you had 1-to-1 gold, and it could actually go past that with a 20-to-1 ratio. Gold to silver, that's $700. So I think you're really stretching it at that point. I personally, I would not hold out for $1,000 an ounce. I might always keep some silver on the side, but I personally think that's a rash error of judgment to hold out for those prices unless hyperinflation takes place. Then the sky's the limit. But assuming that even if you had $20,000 Dow and you assume the 0.8 to 1 ratio, gold would be at $25,000 an ounce, and a 10 to 1 ratio with silver, that'd be $2,500. I can't see anything that high. I mean, that's just, you're looking at some of the historical things that happened in the past. And when silver actually reached this 15 to 1 ratio, it reached it for a very brief period of time in 1980, late 1979, 1980. And it didn't hold there. The only time it really held into this 16 to 1 traditional ratio was when silver was actually monetized, and I don't think they're going to ever do that again. I think when they're going to go back to backing fiat currency with something, it's going to be a mostly basket of commodities, probably mainly related to the energy sector, because the energy sector is very much which drives the overall economy. Because if you really look back all the way through the last 100 years, look what happened when people's true wealth went up and population went up and all this type of stuff. It was because there was an abundance of cheap energy. Um, it's not so, and I think that's if they come out with some new world currency or whatever, it's going to be related to a basket of mainly energy resources. It could be some gold, possibly, maybe a little bit of silver, but I don't think it's going to be, silver's not going to be monetized. So that's why I don't think it's going to stay at this 16-to-1 ratio. It might briefly reach it. It might actually go past the 15 or 16-to-1 ratio for a little while. But if it gets anywhere near that ratio, me personally, I'd be dumping the silver because I think some of these things are very unrealistic unless there's some serious amount of inflation accompanied by it. I don't think silver ever fundamentally is going to go up to these prices unless the value of the dollar goes down significantly. Now, somewhere between 400 and 700, I could see that. That I could see just upon the basic fundamentals of 20-to-1 to gold and a Dow somewhere between 8,000 and 14,000. That's not too unreasonable considering that we're at 12,000. So I'd be very cautious at some of the estimates out there. Personally, that's what I'm doing. I'm not gonna wait around for some that particular value. I think they're way out of line. Now, where some of these things could happen, the hyperinflation thing could happen because the euro is the only way to really save it is they're going to have to keep buying their own bonds left and right. So that's going to devalue the value of the euro. It's going to devalue the dollar itself because everything's linked. The federal government's going to have to practice a heck of a lot more quantitative easing in the future. So that's what could probably drive up these values more than anything. But in effect, what's going on there is the fact that the dollar itself is becoming worth less and less and less. In terms of real dollars, it's never going to hit these kind of prices. Never. But in terms of inflated dollars, the possibility is there. But I'd be watching very careful the ratio to gold to silver because when it does get to about below 20-to-1, I think that's when you're getting pretty close to the top. And definitely should be dumping some at that point in time. I don't think it's going to get back into that 15 or 16-to-1 historical ratio and hold that price for a long period of time because we really kept it that ratio was when people were using silver coins for money. And I don't think it's ever going to go back to that again. I don't think so. I think it's going to be a basket mainly of energy commodities, possibly mostly energy commodities, and maybe some other commodities, but gold will be much more weighted in there than silver. I don't think you're ever going to see silver like completely monetized as it was before, and that is really what made the silver that 16-to-1 or 15-to-1 ratio. So I quite don't buy into that, but I do think between $400 and $700 in terms of non-inflated dollars is a reasonable estimate as to when it's going to get there. I think sometime when in this year it's going to get between 60 and 68, and that's when it's going to have another pullback. So I'm going to be selling off PSOV at $60. Right now, nothing's going on in the markets. It's pretty flat. So there's some gains today, but I mean there's pullbacks. It's really been staying in a very, very tight range. What could happen is, like I said, a black swan event. It could be that oil is going to drive up greatly because of something going on in the Middle East. Everybody's kind of expecting that. Oil shouldn't really be this high right now, fundamentally, just due to the economy. But there is a lot of people out there that are buying options for $150 oil, and they started doing that back in November. at the strike price would be at $150. Um, I personally think that's a very very realistic possibility. As far as something else, and I know Max Kaiser talked about this on silver, and I don't listen to this guy anymore at all because he doesn't give me any good information. But he talks about this J.P. Morgan price, and it has to be above the price of silver, or else they're going to be going under. I don't know what he is talking about. I don't buy into that in any respect whatsoever, and I don't see any number explanation that says that, because here we just look back at the end of November. Silver, the J.P. Morgan price was at 28.50 stock price, and silver was probably about 31, 32 at that time. So I don't know what he's talking about with that. I think that I hear that rumor repeated so many times. I think it has no bearing on anything. So Max Kaiser's just another clown playing to the crowd, or what conspiracy theories or whatever's talking about. I don't think everything's going to fall apart as far as the euro goes, and I swear, I think, as I've been saying before, I think what's going to really cause the economies to crash a lot is just if there's some kind of strangulation on the oil supplies globally. And it does not even have to be a war in that case. It could be that the sanctions are enough to cause Iran to slow down its output, because people can't buy any oil from Iran, and that may create enough of a supply shortage to drive up prices, and that will hurt the economy. So that looks very realistic. So in the long run, for even just this year 2012 that's coming up, there's probably the only way the governments are going to survive is to do a lot more quantitative easing, buying back their own bonds and everything like that, because they're so heavily in debt. So there is going to be a lot of currency devaluation. So do expect the metals to go up for that reason right there. Quantitative easing is what drives the commodities up, and I'm in every type of commodity there is. From copper to all the precious metals, the palladium to the platinum, and the rare earth metals, the mining. So heavily, basically, in all the commodities. When QE gets ramped up again, and the Eurozone practices more QE, despite what European Central Bank Mario Draghi says that they're not going to do that much. They're not going to let that euro fall apart. They will do a lot more quantitative easing. So expect some serious inflation coming up in 2012 for sure. And that's going to be very bullish for the metals and all commodities.